we're going to work on some adjusting entries for Balloons Incorporated. Balloons Incorporated received $5,000 from a customer for balloons to be made this month and next month. At the end of the month, $1,000 of the order was complete and shipped. What is the initial entry and the entry needed at month end? And how would it be different if the initial receipt was all recorded to revenue? Alright, so let's do the non-error condition first. So we would have gotten the cash. We would have debited cash, made cash go up, and we should have credited unearned. Why should we have credited unearned revenue? Because when we got the $5,000, we hadn't done anything for them yet. We hadn't delivered anything, we hadn't performed any service, we've been paid in advance. So we recorded an unearned revenue, that's a liability account. We have a commitment to do something, we haven't done it yet. At month end, we've earned a little bit of it, and so we would remove the part that was earned from unearned, use it with an adjusting entry, and we would put it into earned revenue, the $1,000 that was completed and shipped. So that would leave a balance of $4,000 in the unearned that hopefully would be earned in the next month. What if the initial entry had been put to revenue? The whole thing. That's not correct, and at the end of the month we could fix that with an adjusting entry by removing from revenue the $4,000 that was not yet earned. That would leave $1,000 in there, and that's what we need to have in there, and we would set up the unearned revenue of $4,000. So now the adjusting entry has now fixed the books to have the right balance, that $1,000 in revenue has been recognized and $4,000 in unearned is there. So when you're doing the adjusting entry, it matters what the original entry was. So you have to look back to the original entry, whether it was correct or incorrect, and adjust to get to the balance you need. So you can't always be assured that the client makes the original entry the way you would have liked it. So you just go back and see what the original entry was and then propose the adjusting entry needed. Let's try the supplies adjusting entry. Balloon Inc. had 400 of supplies at the beginning of the month. They purchased another 1,000. At the end of the month they had 200 left. What should we do? How should we record the purchase and adjust at month end? Okay, so we would debit the supplies account for the purchase and record the cash. Now at month end we want the supplies balance to be the $200 left. So we had 400, we added another 1,000 to it, so now the balance is 1,400 and we need it to be 200. So how do we get 1,400 to become 200? We have to back out 1,200. So we have to back out 1,200. And what's the other side? Supplies expense. It's been used up. And you can make a little T account. I can do that for you here if you just want to see the supplies account. Get a visual on it. So we started out with a balance of 400. We added 1,000 to it. We need the balance to be 200. So the question is, what amount here do we need to reduce it by to get it down to the desired ending balance? Make it look like a T here. There we go. So what do we need here? So 1,400 minus 200 would give us this. And so now our T account, our supplies account works, and that shows what entry was needed there. What about the second hand? Would this be different if the purchase to supply was booked to supplies expense rather than supplies on hand? So what if the entry had looked like this when they bought the supplies? And then cash. Now what adjusting entry would you need? Well, now the supplies account doesn't have the 1,000 in it, does it? because the 1,000 was booked directly to supplies expense. So now we just need to reduce supplies by 200. In order to get the balances correct. So now supplies expense will be 1,200, which is what it needs to be, and the supplies ending supplies account will be 200, which is what it needs to be. So again, the adjusting entry that you need at the end of the period depends on the original entry. So it's not always a given that they did it in the same way you would have liked it to be done. You have to check.